Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Happy Monday, 14th of November, 2022. Market taking a little break from the rally here in the early going. We did have Fed Governor Waller talking Sunday about the need to do more rate hikes. Spoke of the messaging from Powell was more of a step down in magnitude, like, seeing 50 bips in December versus 75. With the dollar up a touch this morning, combined with those comments, might be putting a little bit of pressure on futures. And we had a pretty big run Thursday and Friday, so there's that. So for us, we're in the bear market rally camp here, just to give you some levels that we're looking at. In terms of the S&P, we think we can get to probably 4,100, which would be a slight overshoot of the 200-day moving average. The triple Qs can probably go over 300 and still be in a downtrend. The NASDAQ can run up another 1,000 points, roughly to 12,300. And arrive at its 200-day moving average. The Russell is the one to keep an eye on near term, and that's maybe the most interesting part of the broad indices. Again, the Dow has already broken out above its 200-day, but that's 30 stocks, so it's really hard to take a lot from that. But the Russell, being a bit more than 30, that index did close above its 200-day on Friday by just the slightest of margins. So keep an eye on that one today, see how it does, if it can maintain that strength and maybe even add to it, or does it give it up and close below, will be just something interesting as we sort of stair-step our way closer to year end here. Xi taking measures to renew growth over in China. There was an article over the weekend talking about stimulus. There was like 16 steps or something like that going on. A lot of it focusing around the beleaguered property market over there. We own the EWH, as we've talked about. That's looking up over 1% again this morning. Small caps, I think, in China look interesting. That'd be another space I would check out. I wouldn't, again, I don't want to get involved in the big ones. I just don't trust Xi to not put down some new limitations, some new standards, some new something on these guys, and just crush the stocks. And then also, long treasuries, I think, looks interesting. Looks like we're passing the baton off from peak inflation to slowing growth, and looking at earnings declining, forward earnings estimates declining as we head into 23. So under that narrative, treasuries should do quite well. They get that kind of, number one, they've got a much higher yield than they have in the past. Number two, they get a little bit of that flight to safety bid, as we do see probably a lot of stocks need more downside to take in effect of those declining earnings going into 23. I'll go back to Gunlock's comments that I've talked about. He used comments from a week and a half ago. He thinks the 10-year yield has seen its peak. We do own the SCHR to express a view on the middle of the treasury curve. We continue to like gold on pullbacks, GLD, GDX, GDXJ. We own the GDXJ. We like oil service on pullbacks as well. No change in that sentiment. And just looking at nat gas up 6%. They must realize winter's coming. It is super cold where I'm sitting here in the mountains of Utah, that's for sure. Have an awesome day, and we'll be back tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.